Hi, this is Chris. Welcome to another episode of Trading Takes. Our usual host, Sam, is out sick for the week, so we wish him a speedy recovery, but I'll be taking over his job while he's recovering from, presumably, the bubonic plague. This week, we have a very special guest and a great episode coming up. We're going to be talking about adapting to the markets over time. We're going to be talking about how to trade different styles and how to learn different styles. And we will finally find out if our guest who's coming on is the largest farmland owner in the US or is Bill Gates. And we're bringing on the one and the only Phil Goedeker. Phil, welcome.
How you guys doing? Looking forward to being here today.
What's doing, Phil? Thanks for coming on.
Yeah, I'm excited. Looking forward to covering some good topics, and I always love chatting the markets and trading. So really looking forward to it.
So just before we get going, we do need to answer the question, who is the largest farmland owner? Is it you or is it Bill Gates?
I'm not even close to Bill Gates. No, not even close. Bill Gates has me beaten by quite a wide margin there. But it does make me feel good that I have a little over 4,000 acres, and it makes me feel good that somebody as strong or as smart as wealthy as Bill Gates is also accumulating. So it makes me feel good and that my money is safe and hopefully growing.
Yeah, and if you combine your holdings with his holdings, then it's definitely
That's right.
Yeah.
Right.
Before we get into today's episode, I'm going to go over the winner from last week's contest, and that is Lawson Arts 9917. And that contest was leave your aha moment in the comments section. And the aha moment that won was basically about it took me a long time to fully accept that it's far more important to focus on process as opposed to the result. I recently withdrew 90% of the funds I had in my account so that I could focus solely on my process and building strategies without having my judgment clouded by my P&L. First time I've noticed real improvement in the couple of years that I've been trading. So that's a great takeaway, and congratulations to Lawson Arts 9917. You have won a free month of Investors Underground, and you can email tyler@investorsunderground.com to claim your prize. And for next week, leave a comment of what is your biggest aha moment in the comment section, and we will pick another winner next week. And now back to the conversation with Phil. So Phil, we have a lot of great topics to cover tonight, but first I want to start with a hot take. And that's basically where we just take a topic, we all go around and give our take on it. And for this week, it is opportunity cost. And so opportunity cost is a significant factor in trading. So when there are so many things happening at once, how do you really focus or how do you pick what to focus on?
For me, it's what is the most volatile and what do I think offers me the highest risk versus reward, right? So I would say early February, early to mid-February, that was NVIDIA and SMCI. I have actually, I know we're going to talk about this a little later, but I have kind of transitioned my trading away from the short side, kind of more to the long side. I'm also still a full-time option trader. But for me, it's always picking out the best. What do you think offers you as a trader the best reward with the lowest amount of risk? And whatever that is what I focus on. And it is hard because as we've seen with the markets lately, especially, in 2024, there's a lot of stuff moving, to the upside, some stuff moving to the downside, a lot of big breakouts. It is hard to follow everything. But for me, I can really only fully focus on a few things. And it comes down to what do I think I can make the best amount of money on with the lowest amount of risk?
Yeah, and it's a moving target too, because the same thing that might be the lowest amount of risk and the highest reward in one market, that might not be the case 6 months from now. So it's a very interesting dynamic where it's not only the person, but also the market, and then taking all those things into account to really pick it. And so over to Judah, you talk about opportunity cost a lot, and I know that you often clear out old positions to make room for new positions. So how do you think about opportunity cost?
Yeah, so usually I'm trading like I'd say 5, 6 names, but when there's so many names moving, I'll take less sized positions and I'll go up to like maybe 9 or 10. This way I could get more, I could cover more ground with it. And really, what I look for, like Phil says, I want to look for faster moving names and cut out the slower moving ones. and I'll also look at the daily, which I do anyway. But like the daily is pretty much everything to me, and that's where I'll start. If there's like 100 names moving, if the daily looks proper, then I know there's a better chance for it to continue. So like if something's on day 2, 3, like even SMCI, if it's only on day 2 or 1, and I think I'll continue tomorrow, I still may not take it because I missed the day 1 move. So generally, it's just breaking it down through the speed of the stock and the daily chart and seeing like, has it broken out yet? And if not, then that's that's priority over something that has broken out and something that's on, day 2, 3, maybe even a week later that has no actual daily setup there.
Yeah, totally agree. And then Stan, over to you. How do you view opportunity cost?
Yeah, I mean, I think similar to what Phil and Judah mentioned. I think for me, opportunity cost, it really has to do with time. Where do I dedicate my time, and then what is it that I'm able to extrapolate based on that time dedication? So when it comes to risk, or when it comes to looking for a particular ticker or stock to trade, my focus is where can I set aside the least amount of risk, or least is probably the wrong word, but the most controlled risk versus the reward that I'm looking to extrapolate. If we take today, for example, with crypto, Bitcoin, and Ethereum making these parabolic moves, now I would much rather focus on the Maras, Riots, CLSK of the world, because there's volatility. And when there's volatility, there's forgiveness. Um, if it's treated properly, right? That's where risk control comes into play. But volatility, in a way, also provides for forgiveness because of the constant up and down action. But ultimately, for me, Chris, it's opportunity cost comes down to time. That's what I deal. My currency dealings are time. Where do I spend the least time to extrapolate most value out of it?
Yeah, and that's I know Lance Breitstein has talked about basically you have to constantly assess what is just the highest expected value thing you could do at any one time, and that's really where the focus goes. So getting into adapting to markets, Phil, you have had a very long and successful career in trading, and it's actually changed quite a bit. Your background, you started in college or a little bit beforehand. You were more of a short bias trader. You did very well. You had some drawdowns. You've adapted. You've changed. What is different, or could you walk us through that progression of what your trading careers look like and how it's changed from a short bias to long biased and then options as well?
Sure. So, yeah, I started trading about 20 years ago, right when I was 20 years old, in college, and mainly as a short bias trader. My senior year, I started, I traded a little bit my sophomore year, lost money. My junior year, lost money. My senior year, I had $5,000 that I made over the summer. And senior year of college, started with 5,000 in August. I hit a really strong market on the short side, of course. A lot of parabolic moves. When I graduated in May, I had $1 million. Turned that 5,000 into $1 million. So I thought instantly, I mean, this is it. This is my career. This is what I'm doing. I had an accounting degree, but I'm not going to be a CPA. There's no point. And for the next several years, I just obviously grew as just a short bias trader, looking for small caps with extended moves. Um, Heavily on the technical side. That was kind of my specialty, studying the charts, waiting for the breakdowns, just studying that price and volume. As I got older, I would dig into fundamentals more, but I found that fundamentals a lot of times don't matter. When you're shorting or trading these small caps, almost every one of them is garbage. Almost everyone, needs to raise money, it has a horrible background, but that doesn't matter. These can go, as everybody knows, way further than you think. So the fundamental side didn't really matter, but I kept, trading, on the short side up until probably, really about a year ago. Now, rewind probably 7 to 8 years ago, I had a mentor who taught me how to trade options, basically how to sell options for income. And he had a tremendous career in the option market, and I kind of built that and scaled that. And at first, it was just kind of a side gig, let me focus on the short side, make a little bit money in options. But the options for me kind of slowly started to take over. And I was making more money in options than I was in small caps. And also it was kind of less time, the time requirements to trade options for me were a lot less than managing the small caps. So I've built over the last 7 to 8 years, I've built the option strategy and scaled it. But I would say probably a year ago, year and a half ago, I kind of started to just get burnt out on the short side. I had a great year in 2020, great year 2021, 22 was okay. 23 kind of started to get slow, and I started to kind of mentally just check out of the short side market. I got tired of just the, searching for borrows, paying for borrows, dealing with the algos, dealing with the squeezes, dealing with kind of having to fight these all day. And, to be honest, not that I'm lazy, I still put in a lot of time, but I don't want to stare at my screens all day anymore. And to trade small caps effectively, you have to put in a lot of time. I mean, I was putting a lot of time. So I slowly kind of just started, realizing my personal opinion, as I get older, there's a lot more money to be made if you can, on the long side with less time in front of the screens. So over the last several months, kind of later on in 2023, I started to really adapt to the long side, studying basically just high quality companies that are making good money, that are growing, and I obviously have a background in technical analysis, so good charts, good companies, and letting it ride. Now, obviously, the market as a whole, the market direction as a whole has a huge impact to how your success on the long side, right? I mean, if the market's going up, I think 3 out of 4 stocks are going to go up. They're going to go up with it. So I've had, very good success so far on the long side. But again, I've had a lot of market help the last several months. But again, I'm still focusing on options is kind of my main gig. The long side is kind of my secondary gig. I did short SMCI 2 weeks ago. It was probably my first short in months. Did very well on that. But I think my time as a short seller is kind of in the rear view mirror. So that's kind of where I've been.
Yeah, and it's an interesting thing because, like we were talking about before, with what's the highest expected value thing that you could do. You have to take into account your personal situation and also the market. So do you think that most of what led to your progression was where you were at in life, or was it because the market was changing as well? I know you said that like borrows got harder to find,
Yep.
squeezes were more prevalent. So is it just a combo?
I think it's a little bit of both. It's more so where I am at in life. The short game for me, and I had tremendous success at it for 20 years. But it was a battle. It's a fight, right? You have to fight for borrows early in the morning. You have to pay tremendous borrow fees. I had years where I was paying well over $1 million a year in borrow fees. And again, you pay that whether you make money or lose money on the stock. And then, the last few years we've had some of these Chinese squeezes that just crushed people. What was it? HKD going to $2,500 top, just ruining people overnight. And, my strategy in the past was to swing a lot of these stocks, hold them overnight. 10, 15 years ago, my strategy was a lot of times hold these stocks for a month at a time. And, but, borrow fees, kind of took that away, and it kind of went more to day trading or holding these for a few days. So the strategy did change a little bit. The market did change it a little bit because it's dangerous to hold low floaters overnight. I mean, you can just, it's hard to have a strategy where overnight you can get wiped out. That's not
Yeah.
a successful long-term strategy. But again, the other side is that I'm 39 years old right now. I've had a tremendous career, a very fortunate career, and I don't need the money really anymore. But what I don't want is the risk. I definitely don't want the risk, and I don't want to trade all day, every day. So when you look at the long side, and obviously the some of the biggest, best investors of all time, where do they make their money? They're on the long side, right? And I think if you can try to, certainly not perfect the long side, but if you can try to learn that and tweak that, where you're just buying good quality stocks and swinging them anywhere from a few weeks to a few months to maybe a few years, you can get, I guess you could say you can get your fill in the market, which I love. I'm addicted to the markets. You can also make money, but you can kind of do it more on a part-time basis where you don't have to be in front of your screens all day, every day. So it was kind of a twofold deal, like you mentioned.
Yeah, and that's a nice way to progress throughout your career to be a little bit more hands off. Now,
Sure.
Judah, that's a similar style to what you have, except you're not so hands off. You're very active in the market, so you
Yeah.
want to be with the trend. You find great companies, great charts. Can you tell us about how you got into your style, and do you think that you'll stay with this, or do you think it'll change and evolve over time?
Yeah, so I've always been a long side trader. I don't think I've shorted a stock ever since I started trading. And I mean, I don't plan to change that. I enjoy the long side. I enjoy the trend of it, going up. And it's just very familiar to me when I see a stock and I think it could go higher versus something that could go lower. Because most of the times you think something goes lower and it could go either way. But like for me, I'm more comfortable, I guess, on the long side. But I mean, I had a question, Phil, regarding this as well, because did you always swing trade even on the short side? Because when you say your account was 5,000, I feel like you had no choice sometimes to swing trade because you can't day trade as much.
Correct.
So like, how'd you deal with that? Like
Well,
first off with a small account,
sure.
and second of all with swinging, especially on the short side.
So 20 years ago, when I was trading in college, swing trading was obviously the way to go because I still had to go to college and I was playing a sport in college. So I really didn't even have time to day trade back then. So it was more of looking for an extended chart, shorten it. When again, my first 2 years of trading were kind of trying to figure out the long side and I sucked at it. And then my senior years, when I figured out shorting, turned 5 grand to $1 million, did very well. But I didn't have the time to day trade back then, so swing trading was kind of the only option for me was to short a stock. You hold it a week or two. Basically, you had your levels, right? You short a stock at the stock went. Let's say stock opened up at $1. A few weeks later, it was $10. You shorted at 9.50. You put a stop in at 10.50, and you just ride it. You ride it for a few weeks, if that's what it takes. And again, back then, 20 years ago, I don't think I even paid borrow fees. I was at Scott Trade. I don't think borrow fees were even a thing back then. So there's nothing to worry about with that. But you just had your risk level. I put stops in and I just let it go. And that was really about it.
So it was like a lot of patience before you get into something because that would have to be swung. And then
Correct.
it was a lot of patience riding it back down to, where I guess you were
Correct.
satisfied or where you thought the levels stood.
Correct. Absolutely. Yes.
Great. And then over to you, Stan. Now, you are mostly a short bias trader. You've been trading for a long time. How did you start that way? I mean, I know that you learned a lot from Nate and you have a very similar style to his. How has your style changed, and has it always been short biased?
Yeah, Chris. I mean, no, it definitely has not always been short biased. In the beginning, I believe a lot of traders have similar journeys to where we start and figure out what works for us: long side, short side, holding overnight, intraday, swing, etc. But for me, the way I started is small account, just really trying to build it higher, and I tried the scalping route. Um, I tried the long side. And then ultimately, what changed over the years for me was essentially my risk exposure. I kept getting stuck in these midday offerings. I kept getting stuck in these overnight gap downs on the long side. And I really, figured out that I need to change something. And not so much to grow my availability as a trader, but more so how do I protect my risk and what else can I add to my tool belt. So eventually I discovered the short side of trading, and really thought about what clicked for me was in these small caps when you have a big run that goes from a dollar to 5 to 10 to 20, whatever the case may be. That essentially starts the timer for the stock, because fundamentally nothing had changed, right? That didn't cure cancer overnight or come out with anything spectacular. Fundamentally, for the company, nothing had changed. And then you'd notice is they do their 100, 2, 3, 400% run. And then over the period of a few days to a few weeks, they just start to trickle lower back to where they came from. And that's, something that really clicked for me over time, and hence developed a liking for the short side, because I knew that once that timer started, then it's only a matter of, a few weeks to a few months before the price reverts back to where it came from. Versus on the long side, if I were to buy that and then I get stuck in a midday offering or an overnight gap down and then a gap down again, it could be years before their next bump, or their next opportunity to go higher for me to get off or break even. And that's something that really allowed me to shift the way I view the market, the way I view long versus short. And overall, aligning my progression as a trader with my progression as an individual. Because in my life, as my priorities change, I need to change the way I trade as well. I don't believe you can keep those two aspects separate. You can't progress in life and not change the way you trade, or vice versa, change the way you trade without adjusting, something outside of trading. And as of today, I'm just, for me, it's more about finding what am I comfortable in. And I'm most comfortable on the short side. That's where I manage risk the best. On the long side, I tend to be a little lackadaisical. I tend to, maybe overstay my welcome for a little bit longer, because ultimately I know that at some point or another, I may get my out. But being on the short side keeps me sharper.
Sure. And I think that that's a good difference to highlight, because like what Phil's talking about with swinging good quality, large caps, good charts, and that's what Judah does too, versus, trying to swing some of the small caps or the crappier companies that they might have the good chart. But like I always say, some of these companies have the management has the red button that they press, and they basically are just waiting to screw over shareholders. So whether it's with the midday offering or other things, you don't have that same type of risk usually with a much higher quality name. And so you have a big tailwind if you are in good quality things on the long side, and you have a headwind if you're in bad quality things on the long side. And the same kind of goes with the short side. But Phil, so now that you have changed and adapted your strategy, what's the process of really learning a new strategy? Do you seek out mentors? Do you try to figure it out on your own? What did that look like for you?
No, I try to do everything on my own. That's how I've really done it my whole career. I figured out the whole short side on my own, just trial and error, lots of losses, lots of failures, and you learn from your failures. So that's how I learned that. Now options, I kind of did have a mentor that taught me, got me off the ground. Then I tweaked that and kind of grew that on my own. As far as the long side, no, it's 100% on my own. Now, again, I've had 20 years of market experience, so I'm not a complete newbie by any means when it comes into that strategy. But the focus of waking up and saying, okay, I'm going to buy stocks today instead of short them, obviously is a completely different focus. But it's 100% on my own, and my focus primarily is not really small cap. So, I mean, on the small cap side, you're definitely going to have bigger reward. You can see a much bigger breakout, a much bigger move, but it's like you said, you have that high risk of also a huge failure, an offering, a huge reversal intraday. So I do a little bit of small caps. If I do that, it's for day trading only, but the main strategy is, probably mid cap companies that just have great earnings, great growth potential. I mean, something like, unfortunately, I didn't really trade it, but SMCI, SMCI or NVIDIA, when you look at their earnings per share growth, their revenue growth, it's off the charts. And there's a lot of other companies, not that aren't growing nearly that fast, but there's a lot of other companies out there that are doing, something similar on a much smaller scale. So I focus on those. And again, when you have market strength at your back, the strategy looks pretty easy, because good companies, what do they do when the market's going up? They tend to follow and go up at a higher percentage than the market. And when the market corrects, you hope that these companies fall, less than the market or maybe consolidate, don't really pull back. But I have always really done everything on my own, learned everything on my own, through my own successes and trial and error. And I think I'll probably do that forever.
Sure. Now, one of the differences between long and short, I know that some people view, longing as the opposite of shorting, but
Mhm.
that's only really the case in, certain like bounce trades or something like that of like, longing a spot where a short might cover. Now, buying high quality companies and swinging that is not the same as that is not the opposite of shorting. It's a whole different art. And like you're saying, trying to find companies that they just have a number of factors that just continue to spiral better and better
Mhm.
and better. And you hope to
Right.
catch a good market and have a good name, and time is the friend of a good company in a situation like that. Now, Judah, how much do you take fundamentals into account with your trading? Because you are sticking mostly, I don't want to say all the time, but mostly with mid cap and large cap names. And so it's kind of assumed that if they have a good chart, then they have some kind of good fundamentals or something going for them. But do you look at their cash needs? Do you look at their revenue, their anything like that?
No, not really. It's just mainly if it's a positive news headline or whether they're positive in the earnings. But it's nothing really more than that. Just if something has earnings last night and now it's breaking out this morning in pre-market and then it's trending higher off open, like it's a clear signal that regardless of what the news was, like you could show me a chart, tell me there was news on it last night, not tell me like what it was, if it was related to an biotech earnings, anything, as long as it's trending upward after a news release. That's really all I care about. But what you were saying before about long and short side, I think a lot of people, not everyone, but I think a lot of people focus on the short side because it gives you like a delayed, it gives you more time to kind of decide what you want to do. So like on the long side, something could break out, right? And you could be unprepared. So now you look at a breakout, it's up already 10%, 20%. And now like you're just sitting there and like you're not going to chase that breakout. But now if you're a short trader, you could sit there and you could have like 5 days or even a month to prepare for the short side. So I feel like a lot of times trading on the short side is because you either miss the long side or because like you have that time to figure out when you want to short it. Because like you don't really have that same time on the long side, in my opinion. So it's more
Sure.
about just that's what I think at least,
Yeah, and then
especially on
when
big
you
frames.
and then when you were learning your style, Judah, did you? I mean, I know that you've traded alongside Nate for a while. Where did you really get your style from? Because I assume that you were more of a long bias trader to start, but you found a pretty particular niche within long trading. So how did that come about, and what do you think it takes to learn a new style for someone who isn't familiar with longing?
Yeah, so initially the long side was always the long side, and it started off with Nate's videos, like intraday with the higher lows and the typical ABCD, and then I don't know, I wanted something that was like more like less random because a lot of times it could have that setup and fail, especially on the 1 minute chart and 5 minute chart. So I don't know. I just I was watching YouTube videos and many people know that a lot of what I learned was through Kulamagi and Stock B, same way he did, and like that's pretty much how I learned to do what I do. But then over time, you learn to kind of like build around it, and you have like this intuition, and you have your own. Like he may not take it, but you do because you've seen it before, and that's just the way that you like understand the setup. So it's really just about constantly watching different videos. Obviously, you want to learn from different people if you're having trouble trading and just seeing what works for you. You have to test these things out yourself because we're four people right now on this podcast, and we could say all of us have a different type of trading style.
Yeah, absolutely. And then Stan, over to you. You're big on mentoring, and I know that you've learned a lot from people that you look up to, and now a lot of people look up to you. What do you think? I'll have two questions for you. One is, what do you think it really takes to learn a new strategy? And then what do you think the value is in being a mentor and then also getting mentored?
Yeah, absolutely. I mean, back to what Phil mentioned earlier, I think learning a new strategy, it literally takes nothing but failures. You have to try something, and even if everything that you're trying is right, it may not be right for you. And then to dig deeper, it may not be right for you at this particular time. Maybe in a few months, in a few years, you can go back to it and now it's the right approach. But in this particular moment of time, what is something that aligns to who you are, first of all, as an individual, and how is that market dynamic in front of you aligning with who you are as that person? So learning a new strategy takes more than just executing, more than just looking at certain levels or reading how someone else has done it and thinking, okay, now I'm going to do the same thing. It really takes into an account of who you are as a person, your lifestyle, your risk appetite, your current situation, all of these various factors that must be included, and then doing the fine tweaks that work for you. That's, I mean, I've said this in the past. I can go live and live trade my trades. I can, tell exactly where I'm getting in, how much size, where I'm getting out. And if I'm, live trading for 100 people, 80 of them are still going to get it wrong in some fashion, because that's where you have that grind between what you see in front of you, what you should do, and what you feel based on who you are as a person. So taking and learning a new strategy, it takes time. It takes time. It takes failures. It takes getting knocked down, coming back up, trying something new, adding something, removing something, and then essentially it all comes down to, what can I keep as a bare minimum to where it protects me with with my risk and keeps me in the game, and then continue to add on little components from that point forward. And as far as mentoring now, I think there is a tremendous benefit in being a mentor, just like it is being mentored by somebody. I learned so much by giving back, and I learned things that I could have never learned before because I was never in that position. I learned things about myself. I learned things about how am I able to progress as a trader and get to that next level. There comes a point where you simply plateau at a certain level, and anything you try now, the reward is very minimal versus the risk that it brings on. And I think that's where you either break through that level and then you go further, or you have to adjust something in your existing strategy to fine tune it and continue to extrapolate value from it. So being on the mentoring side is, I feel, my next level of growth into as a trader, as an individual, to where I'm able to switch to something that makes more sense with my life now and my current priorities and where I'm at in my journey. I'm really trying to trade less these days and be around the desk a little less, and only come in during the times where I know there's either volatility, there's an opportunity, there's something to where I'm familiar with. And I think it all comes down to truly knowing your style, your setups. And as I've said it in the past, if you truly have a concrete strategy, a concrete setup, you're not missing it. It's just not going to happen.
Yeah.
There will be no excuse that's going to get in the way for you to miss it.
And that reminds me of Phil kind of stepping back into the short side for SMCI. And so that's an example where, even though you've mostly gravitated away towards that, if you find something that is like a really solid A+ opportunity that you could do in your sleep, and obviously it's not that it's easy, but
Right.
you know it. And so
Right.
you'll come back to the market to do that.
Oh, without a doubt. I mean, that SMCI setup, that RSI, I mean, I think it was a record RSI. I mean, it was just unbelievable. And the extension on SMCI, you just had to. I was having trouble sleeping at night. I was so excited about that setup. But I wanted to touch on what Stan just said about, you know, everybody's different trading style, and he could live stream something to 100 people and 80 won't get it. And that's exactly right. I've spoken in Vegas about this, and I've had probably in my life 20 to 30 traders. Not, I mean, I don't know if you consider them traders, but traders slash friends that want to be traders that have come to my house, watch me trade, look at my setup. I've walked them through everything, and not one of them has succeeded. And maybe it's because I'm a bad teacher, but I've told everyone, it's like, just because this is what I do does not mean it will work for you. I mean, I don't know of any two traders out there that literally have the exact same style or the exact same trading philosophy. Now, a lot are very, 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 very close, but it all depends on. There's so many things it depends on. Stan touched on many of them, but I just want to say I couldn't agree more that you have to do what works for you. I mean, it's great to, I mean, this interview is great because you have different traders doing different techniques, and we can all speak why they work for us or how we transition from one to the other. But um, it takes a lot of trial and error and discipline and really self-reflection on traders to say, will this work for me? You know, can I do this? Do I have the discipline? Do I have the ability to stick with it. It's just amazing to me, again, what Stan said, that I've traded 20 years and I've talked to and had so many traders over, and several of them look at what I do and they freak out. I mean, they say right off the bat, oh my God, I could never do that. I mean, it's not even remotely for me. I mean, I couldn't even sleep at night if I took that risk overnight. And I've had others that say, oh yeah, I could do that. I'm going to try it next week. And they fail, but it just takes time to really figure out, fine tune, and try to perfect your strategy. Um, so I think, yeah, it don't, as a young trader, don't give up, because again, when I started trading 20 years ago, it took me 2 years. Now, again, 2 years of part-time. I was in college and I was going part-time, but there was never a day where I wasn't studying the market, ever. I mean, 7 days a week, I was studying the market. I was looking at charts. I was screening for new setups, screening previous winners, trying to figure things out. And it took me 2 years, 2 solid years. So that's a long time.
Yeah, and
So
I mean, I think Phil, you definitely touched up here on a really good point as far as one of the biggest enemy for new traders is time,
Mhm.
and they simply do not allow themselves the runway to experience the different cycles, to experience the different aspects of the market, so then they can risk manage and survive.
Correct.
Because I I haven't met someone that's been in the business for 20, 30 years that is not in some aspects successful, whatever
Mhm.
success means for them. But I've met plenty of people that have gone from 0 to 100 in 6 to 12 months, and then within 2 years they're gone, because there's just there wasn't that runway. They took themselves out of the game because they were just so focused on getting to whatever the dangling carrot was at the end,
Right.
that through time it just they just couldn't hack it at the end of
Right.
the day. And
Yeah.
oftentimes people severely overestimate what they can accomplish in a year and completely underestimate what they can accomplish in 3 to 5 years, and then they take themselves out of the game.
Right. Yeah. I mean, it's like back in 1999, I wasn't trading back then, but the headlines were everybody's a day trader. I mean, everybody's in the market, everybody's making huge money. What'd they all do in 2000? They all went and got real jobs because they all failed. Same thing
Yep.
back in 2020. I mean, 2020, whether you were a long bias trader or a short bias trader, I was a short bias trader, still trading options. It was a record year for me. It was unbelievable. The traders on the long side, I think, did a lot better than I did. You could make money both ways. And then after that, the market kind of calms down, gets back to normal. But yeah, it's going to go through cycles where at times it's going to look so easy. 6 months, 12 months, 18 months later, it's like, what just happened? It's not, I can't make money in that same way anymore. going back to when I was a senior year of college, when I turned 5,000 into a million, I hit an unbelievable market, and I wouldn't even be able to remotely duplicate that return again because I had no rules back then, no risk management, no money management, no nothing. I was all in, every setup, all in, 100%, and it worked for me. Now, when I hit $1 million in, what was that, May, and I graduated, I thought, well, the next few months, I'm going to turn that into 3 or 4 million. Well, guess what? The next 3 to 4 months, the market drastically changed, and my million went down to 500 grand in like 2.5, 3 months. And I thought, holy crap, what am I doing? I immediately wired out, sized down to 100K, and started back again. But you're absolutely right. You got to give it time. You got to give it. You got to have the time and patience and effort to stick with it if you want to make it over the long run.
Absolutely. And before we continue on, I just want to remind everyone to leave a comment in the comment section describing your biggest aha moment that led to a breakthrough in your trading. Last time we got a ton of comments that came in, so it was great to see those. And I think it's not only good for us to see you guys engage, but it's great for people to type that out because they might think of something and realize something in that moment, and that's a big value add to themselves. And so we were talking about market cycles, and I'd like to touch on current trends. What are the most notable trends that you see happening right now? What's got your attention, Phil?
Well, two things: AI, NVIDIA, SMCI. Now there's SOUN running. Anything that has to do with AI, running huge. I think that trade, at least for the short term, probably peaked out with SMCI parabolic and NVIDIA earnings gapped up, trade a little bit lower. I think that trade's a little overbought now. Not saying it's done, might just be a consolidation period. That and now cryptocurrency. I mean, Bitcoin is just going crazy. Cryptos are going crazy. The SEC allowed, Bitcoin ETFs. I read a few days ago that Fidelity is now recommending asset allocation anywhere from like 1 to 3% to go into crypto, which is huge. And I think Bitcoin is what's called Bitcoin halving up in April. So that's a big catalyst. So right now, crypto is going crazy. And it seems like so far this market in 2024, there's no shortage of opportunities. They just keep coming. So I think crypto is going to stay crazy for kind of a while. Maybe peaks around that April timeframe when that Bitcoin event happens, consolidates, and probably takes off again in the summer or fall. But so far, no shortage of opportunities this year.
Sure. And just to add to that, I like to understand what people are watching in the market and what are the most notable trends, because I think it highlights the importance of focusing on things that are in play. And just as the year goes on, and this goes for any year, a lot of times you just have a lot of chop and drift. But if you have a real theme, if you have something where there's consistently higher volume, a real trend, it's important to really focus on those. So would you agree with that? Or do you go back and forth between what's like the most in play trend and just regular things too?
Well, it's hard. I do both. I screen for both. I always want to know what's the biggest mover, what's the most volatile, because when there's volatility, that means there's the potential to make a lot of money. Not the guarantee, but there's potential when you have a lot of volatility. So that volatility always attracts your eye. The hard thing is, though, with something like SMCI, when you go back a few weeks, it had my attention at 600. Okay, then it's 650, then it's 700, then it's 750, 800, and it goes up to over $1,000. So it can have your eyes for a couple of weeks, which can be tough. So you always like to have kind of your backup names, but I do both. I always have the peak names, what's moving, why is it moving? Because I always follow my two biggest things, my two biggest technical indicators are the easiest: price and volume. I want to know what's moving, what's the volume. When you've got a lot of volume behind a move, that obviously means there's a lot of interest. So I want to trade that, but you always have your backup names as well, because sometimes those names are crowded and tough. And even though they look fun, it can take a couple weeks to hit that one easy day, like SMCI reversal. I mean, it took a lot of kind of mental capacity for me for a couple weeks following that thing. Now it was well worth it, but you don't want to have what Nate calls, blinders on, where this is your only thing you're watching and you can't focus on anything else because you may not hit that move.
Definitely. So I have a follow-up question on that. So now that you're involved on the long side and the short side, when something like SMCI comes along, do you have a strategy to kind of trend it on the long side while still waiting for that pivotal day to nail it on the short? Have you blended those yet, or is that something you're looking to do?
Yeah, I mean, really, again, that was my first stock that I've been interested in shorting, in 2024 and probably even the last several months of 2023. So shorting really doesn't have my eye. It's mainly on the long side. I was buying dips of SMCI with Nvidia almost the whole way up
Nice.
until I think the 900s. I definitely started to short that in the 900s. Lost 2 days in a row before I, hit it pretty big. But again, really, my other focus is still options. Options is still my main gig for trading. Long side is kind of my secondary gig. But and that's when it gets hard. If I could flip this camera around, you could see I have 8 monitors, 34-inch monitors. My two main in front of me are 38-inch. So I've got a lot of screen real estate. Definitely takes a lot of eyes to try to catch as much as you can.
Yeah, and especially when you're dealing with options, because you pull up an
Mhm.
options chain and that takes up an entire screen, and you have
Right,
multiple things of that. So, no,
right.
can we just quickly touch on? Are you mostly writing options, or do you buy calls,
Only
puts? What's your main
only
strategy?
writing options. I only write options for income, and it's not a strategy that I've really ever discussed or put out on Twitter or talked about. And the reason for that is because of its inherent danger. When you
Sure.
write naked options, shorting stocks is one thing. Stocks can go to infinity. The difficulty with options is they're leveraged. And options don't trade after hours. So if something happens, you're you're stuck till the next morning. So with that being said, what you want to try to avoid, I try to stick with the mega caps. I'm trying to stick with Apple and Amazon and Microsoft and Tesla. I do some Nvidia. What you want to stick away from, which has been hard, the SMCIs of the world, the GameStops of the world. Right now with Bitcoin, the micro strategies, those are when you can get in a lot of trouble, because that extreme volatility, the implied volatility of options can just get really crazy really, really fast. So it's not a strategy I've really ever discussed or talked about, because it can be inherently dangerous. But I try to do it in the safest way possible, doing a lot of puts as well, just way out of the money, way out of the money, calls way out of the money. And again, trying to stick with the safer mega cap companies.
Right. And just for anyone listening, I totally agree. I think that for the most part, people should avoid writing naked options due to the tail risk. But there are strategies that can blend long strategies. Like if you own and you trend a certain company like Amazon or Apple on the long side, you can do things like sell covered calls on it. So that way your risk can be capped, but you can still get the dual benefit of the income. And then I want to run over to Judah for a minute. So what has your attention? Because I know that you'll go with most trends. So do you really focus on a theme, or is it more just as long as the chart sets up, that's where you are?
Yeah, the themes are definitely bring my attention to it, and then I'll pick, whatever stock looks good or whatever's breaking out there. So, like Phil said, we have the crypto names that are all, hitting highs. We have the chip names, which are also, a lot of them are doing really well and hitting highs. And then we have the AI names, which right now, I mean, if we're not counting Nvidia and those, they're all like random small cap names that are moving extremely well. And it's really those three, which are, if you think about it, it's forward looking in the world, like chips, AI, and crypto. Like that's, you think about it, that basket it screams future, and that's, I guess, where everyone's mind is forward looking. But then there's also two other themes and two other, I guess, sectors that are doing extremely well right now, which is the obesity theme and sector, which, Novo Nordisk is pretty much near its highs. Yesterday we had VKTX, which had a massive move, and it's been trending very well for the past few months. We have Vanny today, which is up 371% off their news. Lex, which is trending higher. We have Alt, which Carousdale was short yesterday, and that ended up moving actually from when they said they were shorting, it moved from, 9 to 13. So we have like all these moves that, you know, they're just hiding and they're tucked away. And like these are great moves. So it's just really whatever's setting up in any sector. I have all these sectors in these different watch lists that I have, but ultimately it comes down to how the setup is. And shrooms as well, like these psychedelic names are another theme that's just grinding away. We have CMPS, we have ATAI, we have MNMD, and like there's so many names, so many sectors. It really just comes down to the best setup within any of those sectors or
Yeah.
anywhere, like anything. Any news comes out, chart looks good, I don't care what sector it's in.
Yeah, and this current market, at least for the last couple of weeks, it has reminded me of August of 2022. And after you had some, huge sell-offs, a lot of names were packed with short interest. You had a month where a lot of that short interest started to come off on those names, and you had BYND and every name that had 20, 30, 40% short interest, they just took turns squeezing out. And so I think it's helpful for me in my trading to try to compare, what does this period remind me of? And I think that that's something that experience allows. And, I've been trading since 2016, but for someone like Phil or Stan who's been trading, 15, 20 years, you've seen so many cycles along the way that I would imagine that both of you can constantly draw comparisons of a current market or a current theme to where have I really seen this before. And so, Stan, what does this market remind you of? What's got your attention right now?
Yeah, I mean, I think you definitely touched upon it right here at the end, Chris. We saw or currently seeing what's happening with CVNA. We saw Beyond yesterday on earnings. Another one that fundamentally maybe not in the best spot. Higher short interest. So it feels like they're going, one after another. Something that we see very often in small cap land is you have a particular theme of, okay, this time around we have all of these sub $1 moves that start to go from 10, 20 cents up, to 80 cents, 400%, 500%, et cetera. Then we have, some of these China names that they start picking them up one by one by one. And you can, really start to follow that type of trending, that type of theme, that once you notice it in the future, that allows you to save a little bit time. And saving time in trading equates to a higher reward because you can get there quicker. You can get there at a smaller risk margin. You can get there with a larger size before the rest of the crowd, thus, extrapolating a lot more of the expected value from the overall move. And right now, this market, what it reminds me of, I mean, definitely giving me some of these, 2020, 2021 type of vibes. Obviously, not to that extent with the participation and in terms of the longevity of the moves. I think we're seeing a lot of these burst flares within certain sectors, certain themes that if you are quick enough, you can truly capture a big portion of the move. Also, a couple of things, as far as the AI and the crypto moves, that's obviously what's in play right now. We, as Phil and Judah mentioned, we're seeing that with the names like NVIDIA, SMCI, and something that, as far as the crypto market right now, it reminds me of a little bit of 2017 when we had the ICO craze. And even though we don't see all of these new tickers popping up, hundreds and thousands of percent, what I am noticing is that flow, that instant flow and that aggressive flow into the market that makes these bursts of parabolic moves. And I mean, we're about 2 years ago, everyone thought Bitcoin was going down to 2,000. I mean, you couldn't tell a soul that this is going to hit all-time highs again. And here we are, 24 months later, we're brushing up against all-time highs. And even though right now it feels like there's a lot of people still on the sidelines, wondering, is this the right time? And oftentimes it's what provides for the best moves is when it catches a lot of people offside, waiting for that dip. that it actually goes even higher because you don't have that liquidity to drag it. It's much thinner. So that's kind of what it reminds me of right now, as far as where we are in 2024. There has been no shortage of opportunities. You just have to look in the right spots and be open-minded to accepting what the market is telling you. We are going from a theme to sector to a different grouping at a quicker rate, I feel, than we were, 2-3 years ago. But if you're able to get there in the beginning, there's a great value to be extrapolated from that.
Agreed. And so, Phil, what is working really well right now? And I not so much on the options side because again, that's kind of a different subject. But as far as long equity, are you mostly swinging? Are you doing day trades as well? What's working really well in this market?
A mixture of both. The swings I still have on just good quality companies, good charts, and there's a saying the trend is your friend, and right now the trend is up. So the swings, no reason to sell them. Market goes up, virtually every day. It's down a tinge today, an outlier, but you stick with the trend. But I do some day trades as well. A couple days ago, ARM was upgraded, gapped up in the morning. I bought ARM 143-ish. I think I sold it at I bought it 143, sold it 148. CLSK again, was that yesterday or 2 days ago, broke out. CLSK is a Bitcoin miner. Made $1.50 or so on that. Most of my trades are swing trades, but I do, let me change a little bit. And one of the reasons that it's nice kind of being a long bias trader. Now, again, we're in a bull market. I understand that, but there is just no shortage of opportunities from the long side. I mean, whether you want to day trade, whether you want to swing trade, at least so far, there is just no shortage of opportunities. There are days where I get aggravated because there are so many opportunities. And honestly, I don't want to sit in front of my screens all day, but there's so many opportunities. I can't not. Honestly, I just can't not. I have to almost be here because of the FOMO, where sometimes back on the short side, we had, obviously great years, but you would have dry runs where a lot of times that August, September timeframe of just waking up every day, no gappers, no real runners, nothing really out there. But on the long side, it seems like there's just a lot more out there, a lot more to watch, a lot more to keep you interested. So to answer your question overall, both. But my main focus, one of my main reasons for going to the long side is the ability to swing trade and not day trade. Again, the thought is work less, have these names work for you with the time. If you and again, when I transitioned to the long side, a lot of this is going back, looking at charts of quality companies. Look at the biggest winners of the last 3 to 4 years. And what did all these companies do? Why did all these companies double or triple or quadruple? And, some of them could be crappy companies. Carvana, the reason it was so beaten up, there was bankruptcy rumors right back then. And then when they weren't going to go bankrupt, that stock did run huge. But if you look at some of the better, quality companies, the NVIDIAs, the super microcomputers, the list goes on and on and on. It's that these companies are growing. They have institutional ownership. Good, strong quality companies with quarter after quarter after quarter of increased revenues, increased earnings per share. And, that's kind of where my focus is on the swing side, because I think as I get older, I don't ever see myself walking away from the markets. I'm too addicted, but, I'll be 40 in a couple months. And when I hit 45, 50, 55, 60, my hope is that I can be in front of my computers less and less and less and less and let those swings of the good quality companies work for me.
Yeah, absolutely. And they really can work for you, especially if you get a good entry on them. And if you have the right stock, the right market, I mean, just the reward to the risk is just exceptional. And for anyone listening at home, of just something that I like to talk about, because I've had a similar style in the past. I do a couple of different strategies, but when looking at a chart, like it's easy to see a chart have higher lows, higher highs. But something I would recommend people who are interested in learning how to swing or looking at fundamentals is you have to basically be able to read the invisible charts. And what I mean by that is that if you were to plot the earnings growth of a company, that looks like a chart. If you were to plot the revenue growth, the cash, the margins, those are all things that you don't usually see on a chart. But when you have all of those things going in alignment over time, that contributes to the chart. So identifying the key variables that move a stock and what matters to it, and then see if those have good, technicals too, or are those going in the right direction or the wrong direction. And Phil, your comment about, balance, it brings me into our next section, which is the audience questions or the questions. And this one is, what does Phil's trading day look like at this stage in his career? And does he have a healthy work-life balance? And could you talk about that?
Yeah, absolutely. So my trading has really been almost the same the last 5 years, really about 4 years, whatever you want to call it. So 2020 market was so busy, worked all day, every day, and it paid off huge. After that, 2021 was still a good year. But what I do the last several years is May through September, I work probably 1 to 2 hours a day is about it. The hour and a half, in the afternoon about an hour, and that is about it. The reason being is the weather is nice. Our kids are obviously on summer break, June, July, August. We travel a lot. We are not in St. Louis almost at all during the summer. And I just don't. I wind my trading way back. Being that it's February, wintertime, not much to do. It's perfect timing that the market is on fire because I can work more. I can be in front of my computer all day if I need to be. But work-life balance is extremely important because you can get burnt out easily. You can get burnt out easily in this game. And even I'll go back to SMCI a few weeks ago. I mean, that was, a mentally kind of draining ticker. Now, again, I was longing dips to begin with, and then I went and shorted early, took a few paper cut losses, nothing big, and then I hit it big that final day. But then looking back, it's like, you think, oh my God, the money I left on the table was just enormous, right? But those days are taxing, right? You do it 6, 7, 8 hours a day. It is taxing and it can weigh on you, heavily. So what I enjoy, for me, the last several years, it seems like the market is always, at least for me, busier during the winter months. That November, December, January, February, March timeframe, which is good because the weather here is crappy and kids are in school. I don't have a whole lot to do. And if I need to work half a day, 3/4 of a day, or all day, I can. Spring, summer, early fall, I don't. I wind way back, enjoy the other things in life. And like I said, I've been blessed with a 20-year career. I've been profitable 19 out of those 20 years. I had a smaller loss when I was 25 years old, but and I've put my money into other avenues to kind of create passive income so I don't have to work. I just love to work. I love the market. So but I think a work-life balance is extremely important because you don't want to burn yourself out, because I've seen what that's done to people and how it can snowball into bad decisions and poor decisions. And again, I'm sure we all here have known traders who have had one bad trade or a few bad trades where it can end, it can ruin a year, or it can ruin a career. I've had a couple traders I've known that have made an enormous amount of money and a couple mistakes, and they're not only was their year ended, but their career was ended. So it is certainly not worth getting to the point of burnout. You have to know when it's best mentally to either scale back or get completely out. I have never, in 20 years, I have never been completely out of the market. I don't know that I ever can be, but I can scale back enough where I feel safe and I can monitor things on my phone and be outside or be at the pool or be wherever else and still have that, market exposure, but on a much smaller scale and manage risk that way.
Sure. And I know that that's something that Nate really admires about you is your work-life balance. And I know that he's working on that too. He's on vacation right now. Pretty sure all of his brokers had to file restraining orders to keep him from trading this week, but I think he's keeping up with it.
Right.
One thing before I get into the next question. So if you trade mornings so often, a lot of times first hour of the day, what is one tip that you could really share with people for trading off the open, whether it's for an entry or what, is it the first half hour, look for that low to hold for a lot? Like, what's the best tip you can give for entries on the morning?
So what I do in the morning is focus on, it's a little bit what Judah talked about, is I want to focus on what's, right now it's what's gapping, what's the news, what's gapping, and what volume, and what do I think can make a move, right off the bat. Like I said, a couple days ago, I think it was 2 days ago, I bought ARM, I bought CLSK right off the open. Both had good, strong price action on big, heavy volume right off the open. I joined the trend, made some quick money on both of them, held them. Well, CLSK I did hold overnight, but ARM I held a couple hours and I sold it. So it's kind of the for me, the open is I want to have the best, maybe 3 to 4 tickers, or maybe one ticker, 1 to 2 that's out there. Even though if I were to turn my camera around and you're going to see, maybe 80 tickers on these monitors, that open is focused on the best 3 to 4. That's it. I don't look at anything else on the open. Now, again, 30 minutes after, that's when it kind of starts to expand. Okay, if these didn't work or I'm out of that trade or whatever else, you look to, your secondary tickers or your swing, maybe your swing trades, whatever else, and kind of move from there. But I always think at the open, it's best to focus on the best, and that's it.
Excellent. And that brings us to our next question, which is, what is something that you had to do in order to get to the next level in your trading?
So something that I had to do, and I spoke about this. So when I traded right out of college, I was 20 years old, or 22. I traded for about 5 years, and during that 5 years, I made around anywhere between 5 to 700,000 a year on the short side, and it was obviously fantastic money. Being 27 or 28 years old. But I thought, I need to hit $1 million. Well, why am I not growing? Why am I stuck right here for 5 or 6 years in a row? And what finally came to mind was I literally looked at my tax return, my Schedule D, and I went through virtually every single trade. And I don't know why it took me this long to figure it out, but I knew in my mind I'm making all this money on these 12 tickers during the year. SMCI is one of them, and this ticker is one of them, and that ticker is one of them. All these tickers would make my month. 1 to 2 big trades a month. Everything else was pretty much washes. But what I had is a lot of what I consider, I was always okay with small losses. You're always going to take small losses in the market. At least I do. I always have. I always take small losses. I'm fine with it. It's part of the way it is. As long as you can have big wins, you can have small losses. But what I had was a lot of medium-sized losses on not A plus setups, B setups, C setups, whatever you want to call them. I had all these medium losses, and I thought to myself, how do I get to $1 million a year, 1.5 million, 2 million a year? And the options were either, double my size on my winning trades, which at the time I was like, I don't know that I want that extra risk, or minimize, try to wipe out all these setups that you're losing money on. And again, it took me, I'm a slow learner, I guess, several years to kind of figure that out. So that very next year, I decided, okay, if it's not an A plus setup or an A setup, my size is going to be, instead of half size, it might be 1/6 size, maybe 1/8. And my losses dropped dramatically and my net income almost doubled. And I didn't really increase my risk. On my winning setups, I did try to increase my risk a little bit, 10%. Instead of betting X, I bet X plus one. I didn't want to double it because, again, that creates a lot of volatility and stress, and I didn't want to increase that. But I minimized, cut out my losses, and it was really eye opening for me. Like, holy cow, focus on the best, put your money into the best, and try to eliminate the rest. Or if you're going to trade the rest, again, which I still do today. Obviously, there's not always A plus setups in the market. There's B setups, C setups. Trade them, but do it with much smaller size. Or if you trade those setups, maybe you try to trade them in a different way where you can't swing trade those setups. You trade it, and if you get green and make a few percent, you're out. You're out right then and there because the big money is not going to be on that trade. So why maybe trade it, hold it for 3 to 4 days? Maybe you just change your strategy around a little. But for me, eliminating those losses, cutting them back was really what opened up my eyes and took my trading to a different level. This was 12-ish years ago, 12, 13 years ago, something like that.
Excellent. And I want to go over to Judah. Judah, what is something in your trading career that you think has really leveled you up? What was a big change that you made or a small change?
I think it was really just, you know, because I swing trade, like it's just, I just stick with what I buy and let my stops take me out. Like I really don't panic anymore, or I try not to, because there's no reason to. Before I get in there, I know exactly what I'm losing if I stop out. And that was something that used to, give me problems. Is like, for example, when Nate and we spoke about this in the past, but like when Nate would talk about shorting something that I was long, I would think about maybe selling it when it didn't give me a full reason to. And now it's just like I'm sitting in something, and it could pull back to wherever. Like for example, something that I took today, it hit 883, and then it came all the way back down to 7, and I didn't take any off, and it didn't stop me out either. So like there was no change in that position. I had no worry about that position because I knew exactly what I was losing. It's not changing. The number will not change if you get stopped out after it's gone up 30%. All you're doing is losing paper profits, which also get to people's head at times. Like paper profits, they're meaningless. Until you convert them to real profits, they're not really anything to worry about, and nothing that upsets me where like, oh, I could have made this and I could have made that. You could do a lot of things, but like you need to really have your rules and not be afraid if your rules are there. That's I think where people, get worried and mess up a little.
Sure. And then Stan, what's something that really helps you level up in your trading?
For me, Chris, that would be admitting when I'm wrong and doing so quickly. That is something that has completely elevated my trading in various aspects. Number one, when I admit that I'm wrong, uh, it allows me to reevaluate the same opportunity with a clear mind without having the baggage of either carrying too much size or being on the wrong side or worrying about what's going to happen next. And that kind of ties into one of the quick tips of the first half hour 1 hour of trading. That's where it truly, for me at least, it stays most important to admit when I'm wrong and do it so right away. And uh, again, it allows me to take a seat at the same table, but now with a clear mind. That is something that has really helped my trading. And I gotta say, to this day, Chris, I mean, I still make some of the same mistakes that I did 15 years ago. Some of the same mistakes I still make to this very day. And some of the things just never go away, right? But the difference today is I recognize it within 3 seconds versus 4 hours, and that translates into a much tighter risk and a new opportunity to review the same trade again.
Yes, absolutely. And for our final question for Phil, has there ever been a really difficult moment in your career that made you consider not trading anymore?
Well, there's been a lot of them, I mean, yeah, the losses, I'm not immune to having a few big losses. And earlier in my career, again, I lost money for 2 solid years in college, but, then I was so young and motivated. I thought there's nothing going to stop me. Um, Whenever I think about quitting, which is very, very rare, I mean, I don't think I ever would quit. It would be more of just sizing down, would be after, losses or a stressful trade or stressful several trades. Like if I was, for instance, if I was short biased, fully short biased, and I had started to short SMCI in the 600s and then 650, 700, 750, 800, 850. By the time that got to 1,000, you would be so stressed out. And I've been there. I've been there in my career. I mean, not to reverse to back to talking about options though, but I've traded options for 7 or 8 years. I've been profitable every year doing that. But when I was it 2020 when GameStop ran, or I don't remember the year. It's been a few years, but I lost $2 million on GameStop in a maybe 3-day period or 4-day period, trading options on GameStop. So on an instant like that, yeah, I want to quit. I think I can't do this my whole life. It's too stressful. And then a week later, I made half of it back. And then, I think TD Ameritrade actually like barred the symbol, or, you can't sell naked options anymore, which I was, pissed because I could have made it all back. But, you know, it always happens if I have a big loss, or, a few losses, or just a stressful time in the market where I'm, you know, putting in a lot of time and maybe things aren't working the way I want them to work, where you think, why are you still doing this? Because again, for me, I've been lucky enough in my career where I don't have to work. I just love to work, but I love to work when things are going my way. Things go my way, you know, more times than they don't. But when they're not, again, yeah, mentally it's taxing. It's hard because we as day traders, um, you know, the I guess the definition of a day trader is you want to make money every day you trade, right? But we all know that is not gonna happen. I mean, for me, again, it's with options it's completely different because I'm trading options for income, so I do try to make money almost every day in that. But from the long side or from the short side, again, it's a lot of times it's big wins. I'm trying to make big wins, and everything else is maybe a wash, a little loss here, a little win there, but it's bigger wins. But it's tough, and I think that is what maybe causes a lot of younger traders to fail, in that they want to truly day trade. I need to trade every single day, make money and be profitable every single day, and that is not the case. And I think if you have that mentality, you're more likely to fail than not.
I agree with you. So, Phil, thank you so much for your time today. This has been an excellent conversation. And a reminder to the viewers to like, share, and subscribe, and send this to someone or a trader that you think would benefit from this conversation. So thank you all. Phil, Judah, Stan, it's been a pleasure. And we wish Sam a speedy recovery. And maybe one of these biotechs will come out with something that will cure whatever he has. So
Yeah.
Thank you, guys. Thank you, Phil.
thank you, guys.
Thanks, guys. Thank you, Phil.
Thank you, Stan,
Great
as
seeing
well.
you. Yep. Have a good one, guys.
You too.
Bye-bye.